This is the first time that we've ran a webinar of this type, so fingers crossed that it will go smoothly. If you have a question for our speaker, Craig, please use the chat function and address the question to the co-host. We plan to take a question break during the presentation and also at the end of the presentation. We will be prioritising questions related to the webinar topic. It's probably worth mentioning that we're not politicians, and we're not specialised in solving water politics. Unfortunately, we're not that smart, but we are here to help you to better understand the water market and to better use it for your business. And we plan to finish at 2 o'clock. Thanks to all of our supporters, including DELP, the North Central Goulburn Broken, North East Mallee CMAs, Goulburn Murray Water, Regional Development Victoria, Plan to Farm, H2OX and Agriculture Victoria. Today's webinar is the first in an irrigation webinar series. Subject areas in the series include water trade, water reform or water policy, irrigation technology and management. And there will be more water trade webinars following. The next one will be on where is the water market heading in the long term. And that webinar will be held in January, just given that October to December is typically a very busy period for most irrigators. Today's webinar, Water Trading 101, Situation and Seasonal Outlook. So a key focus of this will be helping you to better understand the bigger Southern Murray-Darling Basin water market and how settings in different parts of the basin can affect the water availability and water price in other regions in the basin. Our speaker is Craig Feuerherdt. Craig is a business development manager with H2OX. Craig has 13 years of experience in the water industry, and before joining H2OX, Craig was involved in managing one of the largest water portfolios in the basin. So I'll hand it over to you, Craig. Your slides have just come up on the screen, and we have your full slide. You'll need to unmute yourself, Craig.
There we go. Is that better?
Yep, can hear you clearly.
I love talking to myself. Thank you. So yeah, thank you very much, Rob, for inviting H2X to present this Water Market 101. This is going to be basically a helicopter view of the water market. I'll update a few little things along the way, what's happening in this season. But yeah, subsequent webinars will go into a bit more detail. So as Rob said, feel free to ask questions through the chat. We'll have a bit of a break partway through and try and answer some of them. Yeah, try and stay away from the political stuff. Why is my screen not working? So yeah, as I said, basically a very, satellite sort of view. What's an overview of the Southern Murray-Darling Basin, water availability, what that means, how that affects water prices, some trading tips, and that's not, prescriptive. It's more, how different people operate in the market, the water products that are available now, and then some summaries and questions at the end as well. So we'll see how we go. Computer. So the Murray-Darling Basin, it's a large water system all the way from Queensland through to South Australia. trading goes on in all the different regions. I guess our focus is in the southern basin, so the Murrumbidgee, the Lower Darling, right through to South Australia. And this is where the vast majority of trading goes on. It's a connected system, so we can essentially trade, or anybody can trade water from the Murrumbidgee all the way down to Goolwa and into the Goulburn and the Upper Murray. Okay, so as a satellite sort of view, we can always get water pending restrictions between any of these zones. A bit more of a focus in on the various trading zones. So they're all numbered. New South Wales, Zone 11 is below choke, Zone 7 is Victoria below choke. So whenever you're talking with somebody, generally it's about, what trading zone are you going from and to, and what are the trade restrictions. So speaking about the trade restrictions, there's a couple of key ones. So in and out of the Darling, in and out of the Murrumbidgee, in and out of the Goulburn, and then through the Barmah choke, so above the choke and below the choke. And these restrictions come into play throughout the season depending on how water's moving, and those restrictions are really put in place to ensure that there's sufficient water in those systems and they don't basically gain a large liability to deliver water in the future. Okay, so it does constrain where you can and can't get water from and to. The Water Register, the Victorian Water Register, has a good little graphic which is up to date, real time, which shows you where you can and can't move water in and out and what those limits are. Oop, what happened there? Back. Okay, so that's a good little view, and it does pick up on the New South Wales side as well, where you can and can't trade water through. So I'd recommend keeping an eye on that. Also, if you're talking to people and, market intermediaries, and they say, oh, yeah, I've got some Zone 6 water, it's cheap, but you're down in Zone 7, the key question is, can I get it through the choke and get it to my property to irrigate? So just keep in mind that, you want the water where you can use it. Water availability, I don't know what that slide is doing there, but anyway, onto the water availability side of things. So there's some key drivers with water availability, and at a high level, it's the supply side. So, how much water is in the storages, or how much rainfall are we having? What's the volume that's being carried over from last season into this season? And obviously the trade into specific zones. The other side is the demand side. So what's being used and what's being traded out of my zone. And obviously the trade restrictions themselves about where water can and can't move is a major influence on water availability. So at a high level, I suppose, don't worry about the complexity in the graph there. It's not really the point. What we're really looking at here is the trend in water in storage. So these are the major storages across the southern connected basin. So from the Murrumbidgee, the Burrinjuck, Blowering dams, into the Vic Murray, Dartmouth and Hume, and including the Goulburn at Eildon. Okay, so you can see that we have these long spells at very low storage levels, and that was the end of the millennial drought up to 2010. It rained, the storages fill up again, and then we have this sort of slow drawdown. Then we have this slow drawdown here, okay, as we sort of hit a dry period, the volume in storage comes down, and then there's another wetting period. So, we have another rainfall event like we did in 16-17, and then we do this drawdown again. And this is a sort of a continual pattern, and it's also a key driver in what happens with prices. Interesting to note here is this thin black line underneath the chart, and that's the Menindee lakes. And that does come into play for the southern basin if it exceeds 640 gigalitres. So, while there's water in the Menindee at the moment, it's still a New South Wales resource. It's not accessible to Victoria. So that's another little factor that you've got to keep thinking about as well. And all my squiggles are on there, and that's just a bit zoomed in over the last 4 or 5 years, showing that there is this continual drawdown on the storages. So we can't directly equate the volume of water in storages to determinations, which is what gets allocated against entitlement. Okay, but we can, it's a general proxy, but I can't look at the volume of water in Hume and say, oh, that's going to mean 66% against Victorian high reliability, because there's the complexities around the water sharing plans. You know, it's shared between New South Wales and Victoria. The inflows are equally shared, but how states manage it and store water for subsequent years also is a factor. Now this chart, once again, it just shows years since 2007 and what the different types of entitlement received in terms of allocation. And what you can probably see better on, is probably displayed a bit better on this one, which is really, this is showing the average determinations for each of the different zones. So this is purely averages. It doesn't show you, you know, most of the time Victorian high reliability, for instance, gives 100%. But if we look from 2007 through to now, that's the average that each entitlement class would sort of get. So you can see the general security entitlement in New South Wales, both in the Murray and the Murrumbidgee, sort of end up somewhere around 50% on average over the last 13 to 14 years. South Australia, surprisingly, you know, is under 80%, and they had quite a few years early on that were very low allocations, which drags everything down a bit. And the Victorian entitlements, while we start off quite low, and that's just because of the conservative nature of the way we allocate water, we do end up getting generally good determinations by the end of the season. So once again, these are factors that you need to consider when looking at the market. You know, that generally more water comes available as the season progresses, but we also have that, you know, we head into summer, there's more demand and so forth. And this here is just comparing last season with where we are at this season. Now the determinations we updated tomorrow. Interestingly, South Australia's already hit 100%. No, I think I've got that. But anyway, they hit 100% back in August. The Goulburn at the moment is on 51, and that's only about 6 or 7% higher than what it was this time last year. Vic Murray, interestingly here, we're only 1% better than we were at this time last year. Okay, so that says something about what's been happening in the catchments while there's been some rain in the paddock, and that's been good. We haven't had those large rainfall events up in the catchments to yield inflows, and some of that water, some of the rain that we have had has fallen underneath the catchments, and so we've had, you know, quite high flows in the Murray, and that's resulted in supplementary flows in the New South Wales side. But because all the storages downstream of the major catchments are essentially full, we haven't been able to collect that water to add to determinations at the moment. So we're all sort of hoping for this wet spring, which we're 1/3 through and we haven't had just yet. So how does that those determinations sort of equate to water availability? So this here is just showing sort of for the last 5 to 6 years how much water is in the system and how much has been carryover, which is those dark blue blocks at the bottom. And you can see that, you know, in some seasons you get very large volumes of carryover, which contribute quite a lot to the overall availability. And especially here in, you know, 17, 18, the volume of carryover in all the major systems is nearly 500 GL, you know, and that's about 1/3 of all the water that was available. Okay, so carryover is playing an increasing or an increasing factor in water availability. Some argue that that's a negative thing. I guess from an individual standpoint, it's really about a way of mediating against high prices or water availability yourself. So, you know, and the last, this almost mimics that sort of that chart of water, you know, in storage, how it draws down lower water availability. And once again, water usage. This isn't too clear a chart, but we can see water usage here, especially in the New South Wales zones, is relatively static. You know, when there's half decent determinations, they generally use about 1 million megalitres or 1,000 gigalitres of water each and every year, except when they get very low determinations. And whereas Victoria typically has got a very static usage as well, and it really just flexes depending on when rainfall happens and what people choose to do with that rainfall. You know, you might be able to save an irrigation or two, which means that there's more water to use in autumn. But we do get knocked around when there's low determinations like last year. As you can see, there was only about 1 million or 1,000 gigs used last season. So yeah, oscillates with availability, and the usage is really underpinned by permanent crops, which has become more and more a case, especially below the choke in Zone 7 and Zone 11. So Vic Murray and New South Wales Murray and South Australia. There's sort of like a base load of water usage that equates to something like, you know, 600 to 700 GL per year will be used regardless. Okay. So if you take 600 or 700 GL out of that, the last year there, you know, there's not much room here for any other commodity to be using. And that's why we saw the high prices, and, you know, it's just not available to be put into the market, and people command a premium. Just a very quick, you know, availability. Will be releasing a bit of an update on this hopefully in the next couple of weeks, where we see under average inflow determinations. So this is if average inflows occur, where we should get to with determinations. And you can see that there's a fair bit of variability between Victoria and the New South Wales systems, and the estimated usage there is really just a finger in the wind. But in the end, you know, looking like there'll be somewhere in the order of 800 gigalitres of water left at the end of the season, which is not an insubstantial amount, but nowhere near the 1,300 or so GL that was carried over into this season. And a lot of that carryover was done at very high prices, just because, you know, the volume weighted price for last season was very, very high. So, you know, that is another factor that you've got to consider about, you know, when should I buy water? Is carryover an appropriate tool to use, etc., etc. So at a high level, the water availability essentially provide, you know, what is the supply side? And the supply side really drives the prices. Other key drivers are, you know, the climate outlooks, whether it's El Nino, La Nina, which the bombers now said we're definitely in. And then you've got all these other factors about the southern annular mode, the Indian Ocean dipole, and how they all sort of influence what may or may not eventuate on the ground. And then we get down to individual weather events, which really is you know, the market reacts to them. So, for instance, the rainfall that's happened last week, the market just goes quiet. Everybody sits on their hands. They wait for to see if the rainfall happens, hoping that the price will come down. You know, it's meant to be a fair bit of rainfall next Wednesday. We've got determinations tomorrow. So the market is generally pretty quiet. But, you know, if it does rain, the price generally comes off a little bit. How much depends on whether it does or doesn't happen. Counter to that is, you know, if the rain doesn't happen, the price generally goes up a little bit. And as I said before, trade restrictions are another factor. So as they open, it provides an opportunity to move water through that trade restriction, and it might, or it does, it adds to supply in the other system, and that may drop the price a little bit. And the underlying one, who's going to use the water at those prices? So if I can grow a commodity and there's a good margin in it, then that is essentially the big mediator in the market. So back to that original chart that I had of the storages. Now the dark black line on there just plots the monthly weighted average price back since 2007. As you can see, if the storages are full, the prices are very low, sort of sub $100. As we get the drawdown, the prices go up. And, just at a general sort of level, there's my little cursor here, sorry, sort of draw a line across there. So you go back to 15, 16 and where the storages were, we've sort of got down to about the same, but you can see that the prices are vastly different. So 15, 16, prices sort of in that $200 to $300 range, whereas last season, $600 plus. And remember, these are volume weighted monthly prices, so there were trades done at $1,000 a megalitre. So there's also a step change happening in price. Some of that high prices was driven by large parties buying water for carryover, so they were sort of bringing forward their purchasing. That was definitely a factor in the high prices, but it's also, I guess, the changing structure of ownership is also having an influence on that, and the changing water usage pattern being more to permanent horticulture. And just that they demand water and they will pay for it. And we also had very slow allocation or determinations coming on very slowly. So even if you had 1,000 megs of entitlement and you've got 20%, well, you've only got 200 megs to sell. There's not too many people that have 1,000 megs of entitlement, let alone 100 megalitres of entitlement. So it's very hard to acquire large volumes of water, and the larger volumes generally command a premium. Can I delete that stuff off there, Rosal? Here we go. And once again, just the last 5 years and how we can see prices sort of oscillating between from $50, in early 2007, all the way up to 700 plus last season. So, we need a good flush of water into the system to increase the storages, and then the prices will sort of mediate themselves out. There'll be more than enough water around, and the prices will come down. So this is just another sort of look at those prices and how they've changed over time. Up until the end of the 2019 season, that long-term volume weighted average price was something like $143 per megalitre. So just last season, the prices, how high they traded for so long, that raised that volume weighted average price by nearly $40 a megalitre just in 1 year. So we can see the pressure that low determinations or low water availability puts on prices, and how much that can push that long-term volume weighted price around. So, we'll come to it a bit later, not in detail, but about the trading strategy. If you can buy water under that $180, and you can make money out of it, is that your threshold? And if you could lock in a long-term lease or a long-term water product at under 180, you're probably ahead, you're going to beat the general market average. So, it's about looking at these things and not necessarily always trying to, buy water at $20 a meg, because it's just never going to happen. But what price are you comfortable, and what price are you going to essentially beat the long-term average? Okay, and there's plenty of people that strategize around that. They're in the allocation market all the time. They don't use water products. They just buy water when they need it, and theory, they should have averaged $180 per megalitre, even though they might have had to pay $1,000 last season for a couple of megs. Overall, their price is quite low. As for this season, I reckon it'll be something like a 15-16 season, but I think that it'll be higher, somewhat higher. So we'll see the prices increase into summer, and then they'll, come out of summer and they'll drop back again. But I still think that the volume weighted price will probably be, somewhere around the mark where we're trading now. This is in zone 7, around the $300 price, above the choke, and in the Goulburn, probably about $100 less than that, just because of the trade restrictions. But once again, that is highly dependent on what rain falls in October and how much that contributes to determinations. Trading tips, I don't know that there's any such thing as a tip, but I guess the thing to remember is there's a multitude of water market intermediaries, brokers, exchanges like us. My tip is, find a few you trust. I think less is more. The more time you spend phoning people, you just get more conflicting information. It makes it more difficult to make a decision. I'm not saying that conflicting information isn't good, but in the end, you have to question the information you're getting told. And it's always good to have a different perspective. But one or two trusted people will be beneficial. Yes, the water market's unregulated. ACCC inquiry, which we've seen the draft report from, working on that. Water Brokers Association members, abide by the code of conduct for what that means, but trade with somebody here once again comes back to trust. And another one is, work on the landed cost rather than just the water price. You can talk to two different water market intermediaries. One might have water at $2.75 and another person might have it at $2.60. Well, that's all well and good. Go and buy it from him at $2.60, that's fine, or him or her. But what commission are they charging you? Are there any additional fees? Who's paying the water authority fees? Is it simple and clear? Do you know what it's going to cost to get it into your account? That's the true value that you've got to worry about. So always ask those questions. Anybody should be able to tell you that without getting all defensive about it and how it's going. There you go. So ask questions. Never be afraid to ask questions. Even things like who's the buyer or seller. Now that's not is the Joe Blow or not. It's more is this going to a dairy farmer? Is it going to an investor? It may or may not influence your decision, but it's also a good bit of market intelligence about who's in the market and who's buying. As it going to a horticulturist, the person you're dealing with should be able to tell you that at a higher level. How long will the transaction take to settle? And that's as much about when's the order going to get out of my account, when am I going to get my money, or when do I have to pay by, and those sort of things. How much will I be charged, which goes back to the previous points. What's the breakdown of the fees? Always very sceptical about seeing an invoice that just sort of, water $270 and fees, $300. It should all be broken down. And I guess information is the key. And we don't want to be overloaded by newsletters and information. You can subscribe to our newsletter, register for webinars like most people have done here, so gold star to you all. But, once again, it's about finding information that you trust. It may not be information you agree with, but, how can you gain some intelligence in the market? And it's not just about what the price of water is today. What are the macro things going on in the market? When might the Goulburn tea open? Does that present an opportunity? And those sort of things. Common traps, see it all the time. Somebody rings up, I want to water tomorrow, I need the water now. Yeah, again, a bit of planning, give yourself time. It also means that you're not just, you're not caught to buy what water you need at most likely a higher price than you have to. Being indecisive. And that's not about being indecisive about the rainfall event that's going to happen next week. It's more about being indecisive around the price. Know your numbers. If you come to us and we say, look, I've got water on my platform at the moment for 285 in zone 7, you might have spoken to a few other people and you just know, well, I can't make anything work for less than 270. Know your numbers. I'm not going to buy that water. Don't get sucked into it. You can tell me, look, yeah, I need to buy water at 270 or less. I'll give you an opinion on, whether that's viable or not. Another thing that H2OX is just, we don't understand why it happens, but transferring water on and off of brokers' licenses, the key question here is, are they principal trading? In theory, every megalitre of water should go from the seller's license to the buyer's license. There's no need to transfer water through brokers' licenses. There are some instances if you're moving in interstate and the prices, there's quite a high authority fee, but in Victoria, it makes no sense. It's actually more costly to try to aggregate water onto a broker's license for them to move it off. So, always ask where your water is going to, and make sure that it's going to the buyer and or the seller. And the settlement of funds, the fund should be settled as soon as the water is transferred, and the statement should itemise all the costs. Okay, so it shouldn't be, oh, hang on, the water's gone off my account. Mr. Broker, where's my money? The money you should already have a settlement statement. The fund should have been lodged for transfer, and it should be there, the next day at the latest. There's no need, there's no reason for the water to be the money to be held by, in the broker's accounts for any longer than it has to be. Quickly onto our trading strategies. First and foremost, every business is different, so I can't provide anybody any advice, unless I guess we understand what it is that you're trying to do. Fundamentally, you really want to understand what your water requirements are throughout the season. Okay, everybody will have a use curve. When will I be using water? Do I have entitlement? When do I think that's going to be allocated? What do I think the water prices are going to be under various outlook scenarios? So under a dry scenario, if we're only going to get to 67%, what does that look like? Where do I think the price is going to be? So you can use all this information, or you need to formulate a strategy. Do I need to buy it? When do I need to buy it? At what price am I a buyer or a seller? So just because you're a water user doesn't necessarily mean you've always got to buy, always just be on the buy side. There's plenty of people that adopt the strategy of, sell when water price is high and buy it back. And that's can I sell some water now and buy it back later if you're confident that it's going to rain? And all of this is an art, it's not a science. So you will speak to 4 or 5 different people, they have 4 or 5 different opinions on it. But you've just got to be comfortable with the risk you're assuming in doing that will mitigated to the best of your ability. I guess another tip is it's very challenging to pick a market, even for somebody like myself that sits in it every day. I can't tell you what the price is going to be next week, let alone next month, because I don't know when it's going to rain or when 5 of the largest irrigators are going to come in and start buying gigalitres of water. And all of those things have an influence on the market. In general, I think averaging is by far the best strategy. You'll never pick the top, you'll never pick the bottom. If you buy water, consistently as you need it, not the day before, you will or should end up very close to the average price. And as an opportunity comes along, you might take that because it's a good opportunity at the time. Briefly on water, so I've sort of spoken very generally about the allocation market, which bring everybody up, buy a megalitre of water today, job's done. You can lease entitlement, which means that you lease a volume of entitlement. And once again, if you're sitting in the Goulburn, you don't have to lease a Goulburn high reliability. You could go and lease a Murrumbidgee high security. There's no limitation on where you can or can't lease entitlements. But what you do, you pay a set price for the number of megalitres you lease, but you assume all the determination risks. So like last season, if you'd leased a Victorian Murray high reliability entitlement for, let's say, $400 a megalitre, and you leased 100 megalitres of that, well, you're going to be paying $40,000 for the year, but you would have only received 66% of that volume. So in theory, your cost for your water is, divide the 400 by 66, so it's essentially, a third more expensive. So it's roughly would have been $600 water in your account. So all these products will have pros and cons. Forward, you're contracting a set volume of water at a set price to be delivered in the future. So if I contract 100 megs at $400, I know I'm paying $400 a megalitre. And I know that that's going to be delivered on the 1st of November this year. Okay, so forwards can operate within the season. You could also have multi-year forwards that go well out into the future. We've written forwards for 3 years. So that's somebody's locked in water at a price for 3 years away. Okay. The key with forwards and any of these products is, once again, ask the person that's negotiating the deal, the water broker, the market intermediary, who is the counterparty. You have to understand the risks around who is the counterparty, who's the person on the other side of that contract. Will they honour the contract if everything goes pear-shaped? Options are an evolving sort of market. Some of you may be familiar with options in the grain situation, in the grain markets. Essentially, you pay it's a bit like a forward, but you pay a small upfront fee, and that provides you with an option to exercise that at a fixed price at a date in the future. So H2X is, I guess we've got the contract and stuff set up for that. We've done some of these. They'll be the next sort of phase of the next set of products that will come into the market and assist people to mitigate the price fluctuations a lot better. And then there's parking and carryover, which is really just short-term leasing of parking space so that you can carry over water into the next season. All of those, they're the sort of the 5 key products. There's always people in the market on the buy side and the sell side for these things. Understanding the risks and counterparty is key, but also how does it fit into your water strategy, and what risks are you trying to mitigate by entering into those products? Once again, without understanding everybody's individual business, it's very hard to sit here and preach that one's better or worse than the other. So just a quick summary about the season to date. There's substantial volumes have been carried over by the larger horticultural players into this season. And a lot of that volume has been parked in the Goulburn and above the choke. So that comes back to they don't have that water on their accounts where they need it. So they need to rely on the Barmer choke opening up or the Goulburn IVT opening up before they can get access to that water. So the question is, how short, or are they indeed short, of water before those two things eventuate? The water trade to date has really been dominated by the annual croppers. So we've seen a lot of water or movement of water above the choke, and that's aligned with the better allocation or determinations against New South Wales General Security. People are more buoyant on the New South Wales side, more demand or more interest in growing rice and very large crops of cereals that are looking very good. So a lot of the water trade has been going into those sort of crops or into the annuals at the moment. We've also seen some gearing up for the summer crops, which is around the rice guys in the Murray. And the Murrumbidgee, once again, it's above the RB2. We can't get water out there, but those prices have been pretty low as well, $150 to $200 a meg, and a lot of ramping up there for cotton and rice as well. The question to ask there is, do those people that are growing the summer crops, do they have the water on their account, or are they hoping to get prices to stay low or for the determinations to increase? And like a few years ago, there was quite a few people that planted summer annuals and they didn't have their water covered, and they sort of got stung at the back end of the season when they needed to finish off their crops because they had to come in and buy the water at far higher prices than they'd expected. So maybe there's another little tip there. If you're growing a crop, make sure that you're covered, or you have the risks mitigated around that. Will I have enough? No, I have enough water to finish my crop off at the prices that's going to suit me. As I alluded to earlier on, seasonal determinations are not that much different to last season, especially in Victoria. We've had good in-paddock rainfall, which I think is driving some of the favourable outlook for the season, but we do need October to yield some inflows into the catchments to really improve our determinations. In the end, as an irrigator, the water in the dam is what really matters and gives us the water that we can use. So I'm taking an each way bet, typical fence sitter, there's always one. If it doesn't rain in October, which is basically the last of the high inflow months, then I think you'll see prices steadily climb into summer. If this La Nina event plays the game and we get some good rainfall, I think you'll see the prices steady or come down a little bit. Will we get $100 water? Sure, if we have a rainfall event like 2010. But I don't necessarily see that happening at this stage, so I wouldn't be hanging out for $100 water. $200 water in the Murray system, probably maybe, but probably not. And basically every other system is all hedged off the Murray below choke prices anyway. So yeah, while the prices will be a lot lower than last year, they will still be sort of probably in an awkward price range for most irrigators. Summary: we can trade across the whole Southern Murray-Darling Basin. I haven't really spoken too much about how you go about doing that, but your water market, your intermediary, your broker can help you with that. It does present opportunities, but there's also risks there as well. Understanding the water availability, even at a higher level, they're the macro drivers of the price. Rainfall events do provide opportunities. If the market comes off a bit, it might be a good time to come in and buy a bit of water. But once again, I wouldn't go buying my whole season's requirements. Buy what you need and set yourself up, and then watch it and act again. And having a strategy is essential, and that's not necessarily a 40-page document detailing all the analysis. It's just a strategy in your mind. What water do I need to get me to the end of November? How much more determination am I going to get? What am I going to be short? Where's my price point? That I can make a return. And I think the water products, incorporating those when the price is right. We've seen very, very high prices last season for leases and so forth, and forwards for that matter. Those sort of things, they work. It's never good to buy those at the top of the market. I think the risk is just too high. You pay very high prices. But let's say it rains very well into next season, water prices go down to around $100, and you could lock in a forward for 3 years at $200. To my mind, that would be a good purchase. you think that you're giving a lot of upside away, but it would also play into part of a larger strategy to underwrite your water security into the future. And yeah, I think dealing with a fewer number of intermediaries, water brokers, exchanges, whoever you deal with your water, will be generally a better outcome than listening to a whole heap of noise in the market. So that's about it from me. I think
Thanks, Craig. That was a great presentation. I really like the way you emphasise keeping your eye on the drivers of the water market, but particularly water availability, to have a feel for what's coming at you. Potentially a bit like driving a car, looking not just at what's going to hit your bumper, but looking down the road at what's coming at you in time. This season, you described the water availability situation being a bit better than this time last year, and being reflected in the water price. And where that water price will go, you described, will depend largely on inflows and water storages. So I need to keep on those drivers of water price there. You gave us some options in terms of managing price variability with water products, and some great tips just in terms of water trading, knowing your business, knowing your numbers in terms of what you can pay for water, having a strategy, and making informed and early water trading decisions. So just in terms of questions, on my chat function, I can't see any questions there. But just a question for you, in terms of commodity prices and what you see in terms of the influence that commodity prices might have on the water market.
Yeah. I mean, and that's where I was sort of getting at. The price at the moment for the water market. Yeah, the price in the market at the moment is probably awkward for a lot of commodities. Yeah, and I guess, sort of $200-300 water price, just it's very difficult to make decisions around for a lot of annual croppers. It's sort of a no-brainer for most permanent horticulture. I think that's also something we've got to remember, is about how that water use has shifted and how much more permanent horticulture there is in the system. It means there's always be a buyer for water, but it also means that there's also higher competition. An almond farmer can generally pay $1 more than a dairy farmer, let alone irrigated cereal cropper. So that also factors into your strategy around when do you purchase, who's my competition, and it generally isn't your neighbour. It's generally the permanent horticulture guys.
Yep. I do encourage people to put any questions they have into the chat function, so that
there is one there. Oh, I've got one. It says, I mentioned that people think that an increased role of carryover versus storage is a bad thing. Why do they think that? I guess there's a view, well, the general synopsis there is that carryover sort of detracts from potential determinations in the following season, because carryover is sort of the golden goose or the golden egg. It has to be protected to be delivered for next season. I think in Victoria we have a very conservative policy around determinations, and I don't see that as being a negative here. We hear far more about that on the New South Wales side, which is a bit more, what would we say, cloudy in how they might manage their determinations. And I say that's something there. Look, I still haven't seen any proof one way or the other that carryover, a megalitre carried over this season means that there's a decrease in determinations next season. I'm not a subscriber to that, but everybody can have an opinion.
I've got a question here from Nick O'Halloran. Craig, can we get a bit more of an explanation on options, how they work, the costs and the risks?
Sure, yep. So an option is just that. It gives you an option to exercise at a later date. So let's just run through a really stupid example at the moment. I might sell an option for, let's say, $20 a megalitre, okay? And so you're going to pay me $20 a megalitre, but when you pay me that, you're going to take out an option for me to sell you water at $100 on the 5th of January, okay? So you've paid me $20, I've got that money, but I've got a potential obligation to deliver you water at $100 in January. We fast forward, it's the 5th of January, you look at the market price of water, you could go into the market at H2X and you could buy that for $150, and you go, well, hang on, I've got this option that I bought from Craig. So you turn around and you say, oh, Craig, that option I paid you $20 for, here's the other 100, deliver me my water, okay? So because the market price was higher, you'd exercise the option. Okay. Likewise, if the market price on the 5th of January was $50, you'd say, well, you don't even have to tell me. It wouldn't get exercised on the 5th. You'd just go into the market. You'd go down the road to, ABC Water Broking, and you'd just buy the water at $50 a megalitre. Yes, you've burnt your $20 that you paid to me, but you also haven't paid a necessarily exorbitant price for that. So it is purely an option. You don't have to exercise it. So that's a call option. You could also do a put option, which is really the other way around. But yeah, the call option is the most interesting one. So especially like at the end of last season, forwards were getting written, or H2X delivered forwards this year for over $900 a megalitre. Okay, and looking back in hindsight, there were call options being offered with an option price of, I can't remember what it was, $150, I think. So $150 option price for a exercise price of, I think, $1,000. So if that person, rather than entering into a forward at, let's say, $900, that actually entered into an option and paid $150 up front, they would have arrived to, let's say the exercise date was the 1st of October, like tomorrow, they would have arrived here and the market price is $300. Well, they would have thrown away their $150 and just gone into the market and bought $300 water. So that would have effectively cost them $450. But what they've actually done by entering into a forward is they've had to pay $900 for the same water. So that's an example of how they can work. I guess it just gives you more flexibility is the real key. You're not locked into a price and a volume. There is another question here that I've got directly. What impacts do water utilities have on supply in the market? So most of the water utilities, especially in Victoria, but also some of the irrigation operators on the New South Wales side, they have water which they do sell into the market. It is a substantive volume that they have. Fundamentally, especially in Victoria, it's about underwriting urban supply, but they do sell surplus water. And, you know, in an average season, it probably contributes something like, 40 to 60 gigalitres into the market. I'd say all of the water corporations now, or water utilities, have become far more sophisticated in how they sell water into the market. So they'll either do it through short-term tenders, or they use platforms like H2X and others to drip feed water into the market. So you wouldn't even know that it's being sold, but it does contribute, vital supply. And yeah, I mean, the way I look at water is always just about the irrigator only portion. So, this other 50, 60, 70, 80 gigalitres of water that comes into the market's all a bonus. It all contributes.
Yeah, in addition to that, Craig, I've had a question come through. Can you comment about the 75 gig held in Eildon and Hume related to the north-south pipeline and sale of that?
Yeah, so that water, well, there's two factors, isn't it? Some of it's gone off to the urban authorities, and that's some of the water that does come back into the system. And then the other portion of that is the efficiency dividend, or the dividend that will come back to irrigators. I think they're still trying to finalise that exact, how that's exactly, well, when it's going to roll out. Does that answer the question?
I think so. Does it have much of an impact on price?
Once again, that's sort of part and parcel of. Yes, it wouldn't have an impact on price just because of the way that those Melbourne water authorities do it. They basically drip feed it into the market, in relatively small volumes every week. So, they don't come into the market and say, "Oh, here's 75 gigs, get rid of it." So I guess that's another factor that really pushes the market around, is when a small number of parties come into the market to buy large volumes of water. It can have a dramatic consequence on the market, and that's where most water authorities now, or water utilities, have sort of learned that it's in their best interest to drip feed it into the market, and all they really take is an averaging strategy. Could have sold all their water last week for 300, but doesn't, that's not the name of the game.
Unless you've got any more questions there, Craig or John, I might start to wind it up, given that it's 2 o'clock. So thanks for a great presentation, Craig. And thanks also to John for all the background work you were doing there with those technical issues that were happening. Thanks to everyone for participating and for asking the questions that you submitted. Just a reminder that the next webinar in this series will be in January, and we will send out a reminder closer to the date to registered participants. We do value your feedback, and in a second, hopefully a poll will appear on the screen. The questions will be just multiple choice, and there's only a limited number of questions. So thanks very much for being part of the webinar, and please take the time to fill in the poll. Thanks everyone.